How's it going, guys? Welcome back to Investing with Sedg. So, I gotta keep it down, alright? The kids are sleeping, wife's sleeping, I gotta keep it down. The cats are sleeping. However, we need to talk about Solaredge and why if you're looking to buy Solaredge, go down to Walmart and get the biggest bottle of lotion or anything lubricant. So we're talking about Solaredge today, right? You know, this has been a painful stock of mine. And why I'm getting the hell out of this stock. Actually, if I can find an exit, I'm going to take it. All right, the first bounce I get, I'm averaging down, you know, and then I'm going to probably just bounce out of it as soon as possible. I've been looking for an exit for a little bit. And now I've only lost a few $100s in the stock because I knew that solar is just, it's iffy. On top of that, it's a Middle Eastern company. Yeah, I should have probably put a little more emphasis in that. Location really does matter. However, the team, everything, well, except the fact that the founder passed away. But the team is legitimate. I was listening to the conference call. I got about halfway through it, and, you know, it's like listening to one of Diddy's songs. Because in the middle, I was like, you know, I don't want to do this anymore. I don't want to do this anymore. So I just turned it off, you know, and the reason why I don't want to do it is it's simple. I've talked about it before. This is where the headquarters of Solaredge is. Yeah, that's right. In Israel. Now, what I have decided is I will never invest into a Middle Eastern company ever. Ever again. I know that, Palantir, you know, America, we all got, you know, Israel's back or whatever. But at the end of the day, I don't want to invest into companies or into countries that govern off of religion. The reason is because perception, religion, same thing. People have different perceptions of religion, and that's why they all keep bombing each other. So, and it's kids, it's barbaric. You know, long story short, I'm not investing into a barbaric region. And now, yeah, you're like, well, but Zeke, you said, you know, you were going to buy China. Well, yes, China doesn't really govern off of religion. There's logic to it. So you can kind of see where they're coming from in both, in a lot of directions, right? So it's, a lot of their business isn't done in the United States. It's done in like Germany, Middle East. 5%'s only done in the United States. However, I do believe this company really has a solid team. I mean, I've listened to their earning calls. It doesn't seem like they're too far off, or they're, you know, a bad company. I'm not saying that. I'm just saying I can't do it. I ain't got it to do. I just can't do it with Solaredge anymore. So I'm looking for companies to get into, like, you know, and if you're still looking for, like, you know, a solar play, I mean, they're all relatively about the same. I mean, they bring in about the same. Even Tesla's starting to bring in about as much money in the solar world as Solaredge. So, I mean, Solaredge has got to beat by about double, but, you know, Tesla's getting there. And then you got First Solar, which is so overvalued. You can't even buy the ETFs of solar because they're all heavy-weighted in phase and First Solar, which are too overvalued. So, I mean, that's why I was looking. Maybe Baidu might be something because it gives you that China energy-ish type play. I don't even know how much they're into energy more than just, you know, making cars. But either way, I think you should listen to the professionals, because I am just a guy who's not going to invest into the Middle East. All right. So let's hear what some of the problems are and what some of the professionals are a little worried about with Solaredge. Besides the fact they lost that $11 million deal, which they'll cover that in this.
Edge, good old stock ticker Sedg. Joining us now is George Tellis, senior markets correspondent for the Schwab Network. George, I got a bunch of things on the top of my platform that are different time frames. They're like labels on my chart. They're color coordinated for performance. All it is red. pick a time frame, this stock is down on my chart. It's been a rough go.
It has, and this is a sort of a sad story for a company that actually was profitable just a couple of years ago. And if you look at the chart, the stock in the last year, at the very least, is down about 80%, but it's down significantly off its 3-year highs. And there's a couple of news items to speak of. I mean, first off, one of their customers did declare bankruptcy, so there's an anticipation they'll lose about 11 million in revenue from that. But overall, when you look at the total revenue, which is in the billions of dollars, around 2.1 billion, it's just fractional. But I think the news behind this is really important because for some reason, and I can't stipulate why, they actually guided lower for free cash flow for the remainder of the year. The estimates based on analysts at around 216 million, and now it's actually positive, and now it's they're guiding for negative 150 million in negative free cash flow. And while they're doing that, they're actually issuing about $300 million in new common equity to essentially help shore up their finances, because the cash flow is important. The reason I say this is if you look at the previous 4 quarters, they lost about $4 a share. If you go back up another 4 quarters before that, they actually made $4 a share. And again, the estimates for the forward 4 quarters are about a positive $2.76 a share. So they've gone from $4 in profits to negative $4 or losses per share, and now they're expected to resume profitability next year. And the metric to kind of gauge where the profitability will come in is free cash flow. So I think this is going to change the dynamic for the forward expectations for earnings, because I can't speculate why they cut their free cash flow guidance so much. But ideally speaking, I will say this: we talk about companies that are what I call put in 2 camps, especially ones that are down like this. Ones that are in catastrophic declines, which is where I'm going to put this stock in, versus a terminal decline. And the reason I don't put this in the camp of terminal decline is this is not a debt-laden company. They have about 600 million in cash, about 700 million in debt, and they are expecting, based upon what I see, which again may be revised based on the revised guidance for free cash flow, they're expecting to resume profitability next year. So my point is that I think this company's been cutting expenses tremendously to offset some of the revenues, which have been in decline. Last year 2.3 billion, the previous year 3.1 billion was in sales. So they're cutting expenses, but I don't think they're cutting them fast enough. And so essentially they're revising their guidance for free cash flow to the downside.
Yeah, and George, I think that overhang to me is like the majority of the story here, because you have a company that's already fallen substantially. Now they're giving more disappointing guidance, and I know that they were able to raise at least some degree, or trying to raise some degree of cash, but I think you make a good point. Terminal, not necessarily, cash, or not terminal, excuse me, maybe just a step below there. But then when you look at the overall solar space, we're lower today in all of these names. So is that an overreaction then if you're First Solar? Or is this an actual concern if you're a competitor in the space?
Well, I think that the competitors, so 2 of the competitors are First Solar and Enphase. And, Enphase is also trading poorly, for lack of a better word, but it's held up better than Solaredge. And I think if you look at First Solar is the best of breed, at least in the large cap space, because of the exposure that company has to utility grade, solar installations. And utility grade is commercial grade. And the backing behind utilities is public funds. And so the residential component of the solar space, which I'm going to put Solaredge has more exposure to the residential space, that's the area where we're seeing significant challenges because the economy, financing, and even the volume of sales for existing homes as well as new homes are down. And so you're not seeing a lot of pickup in demand for residential installations. And I think that's what we're seeing with this company. But it's been unfortunate because, again, it could be pricing power, which is eroded due to competition, could be various factors. But I can see they're trying to cut costs. You can see it as it's moving along quarter to quarter. But for some reason, the guidance was cut significantly for the upcoming year, and we're seeing more of a decline. So with that said, the analysts who cover the stock are re-rating it as a whole. If you look at Canaccord, they've got a 38 from 58 because of the fact that this is not a company that has a dire balance sheet.
Okay, yeah, it definitely not helping that they have customers declaring bankruptcy, but obviously they have their...
Well, yeah, that they do $2.5 billion a year, and, they're valued at $1.2 billion. Their employees were buying the crap out of their shares at $50, and they lost half of their money doing that. I think a lot of that has to do with the war. I'm expecting a bounce here at Solaredge. This is ridiculous. It's so hard not to buy, but I said what I said. I'm sticking to it. I'm waiting for the bounce, and then I'm getting out. Now, the reason why I'm being very cautious on how I add, I think my cost basis now is down to like $26 or something like that. Like I said, I didn't own much. And I didn't care to keep a little of this BS in my portfolio anyway. Even though, I mean, it's a competitor. Just like he said, it's more residential, and how many people are really getting solar panels on their roofs? Like, how many do you know? I don't know anybody. I see them in the neighborhood, but I don't know the people, I guess. But yeah, the employees buying was the big factor of me jumping on board, along with this valuation. Of course, this was before they started issuing shares, and it appears they're going to continue to issue shares through this tough time. So could this stock go down to $15-10? It could. It really could. If you haven't bought any of Solaredge, don't. And if you have, take this as a learning lesson and look for the first exit out. Even if you find, you're probably better off buying. What is Enphase at? Oh, Jesus. Why are you doing that? See what it is right now. Jesus. $14 billion market cap. Does like $3.5 billion in sales. I don't get this. I don't even. Yeah, First Solar is way overvalued. I wouldn't buy First Solar, so no need to even pull it up. But do I see where, is Enphase even worth it? No, not really. So I'm going to sit on the sideline. I'm going to wait for, Tesla or Enphase and slowly look for an exit on Solaredge for sure. Because, I can't, they're going to have so many wars. They're not even looking for peace. I don't even think anybody said peace. Which is quite ironic coming from that area. But it is what it is. This is the type of world we're living in. We just kind of go with the flow. And that doesn't mean I got to support it. And that's why I'm getting myself out of Solaredge. Not that it's a bad company, and it'll probably do okay if it can make it through these times. But I'm not sure if it could go down to $12. So, I'm just keeping my eyes on it, keeping my ears open, because if you own it, if you're just going to ride with it, then that's fine. If you don't have a problem with the whole, Middle East stuff that's going on, I think you'd still be fine. In my opinion, I'm not financial advice. I'm just saying I'm going to sell this because I'm sick of getting bent over, all right? I'm sick of it. It doesn't feel great, and, it's just, I can't do it. I can't do it. But yeah, I just kind of wanted to give you an update on my thoughts on Solaredge and really how disappointing it has been being a Solaredge holder. Damn it. Anyway, like and subscribe, and I'll catch you on the next one.